Hi, this is Bruce Freed, the accounting guy again today, and as you can see, I just came from meditating. I'm wearing one of my more favorite shirts for meditation, and it's the Zen of accounting. For where every debit, there is a credit, and let that be your Zen, at least in this course. Now today what we're going to get into is the worksheet. Up to this last time when we got together, we were talking about adjusting journal entries, and that those journal entries, if you read on, were posted to all of the general ledger accounts. Once they're posted to the general ledger accounts, we now have our accounts at the proper year-end amounts. But what we must also do prior to doing that is we must, what some accountants call, pull a worksheet. And what that means is we will go to every single general ledger account prior to doing the adjusting entries, and we will pull what is called an unadjusted trial balance. So let's take a look at this very first worksheet, and I would like to remind you that the majority of everything that I show you on these videos is also in your textbook. So if I don't think I've said it before, you should have your textbook out when you're looking at these videos and also follow along with them. The presentation and the numbers are usually very similar, if not exactly the same. So let's take a look at that first worksheet. And as you can see, we are working on Pioneer Advertising Agency, and everything that we do with Pioneer is a follow from the previous chapter. But in Pioneer Advertising Agency, we have a worksheet. This is very similar to a worksheet that real accountants use. And the first thing that we have is a trial balance. Now, how do we create this trial balance? Well, if you notice, we have account titles written down the side. We would simply go to our general ledger accounts that we have, and one by one we would list each account out. The first general ledger account we would have, as even shown in your textbook, would be cash, and at this point it would have a balance of $15,200 debit, and we would place that in a column. So one by one we go and we list out each account with the exact title that it's on its general ledger account, and as we list them out, we put whether they're a debit or a credit. The idea about it is that, again, this is before our adjusting entries. And when we're done, we total out the columns, and of course, as you can see, the two columns are equal. If they're unequal, you need to go back and see where you made an error. Maybe you added up the columns incorrectly. Maybe you put the 500 over here instead of over here, and that's why the two columns would be unequal. But whenever we do any of the columns, as I'll keep addressing as we go through this, the total should always be equal in the end. Now, the next step that we would do, if you even flip the piece of plastic in your textbook, that would bring up the next part, would be the adjustments column. The adjustments column, when we move down to the second worksheet here, as we can see, when you flip that transparent page in your text, you can see all of these numbers. Now, where do they come from? If you go back through the chapter and you look at the adjusting entries that were made in the general journal, those were the adjusting journal. These numbers correspond to those adjusting entries that were shown as examples in our textbook. So as you go through them, you'll see the first entry that we had actually posted was a debit to advertising supplies expense and a credit to advertising supplies to record its use. In that general journal, if you look close, you'll see that each of these adjusting entries were labeled A, B, C, D, E, F, G, and so forth. Some accountants label them alphabetically. Some accountants will label them numerically. But so that will depend on who you work for. And then what you do is you take that adjusting entry and you post it two places. One, you post it to the general ledger account that it pertains, and you also post it on this worksheet column to the account. So when we had that debit to advertising supplies expense, here's the debit to it right here, and notice it is in the adjustments column. That would have been the debit. It would have also gone to advertising supplies expense general ledger account as a debit. Then the corresponding credit, which was to advertising supplies. As you can see, we had advertising supplies here, and there's the credit. And notice they're both labeled A. And what that does for us is that it supplies a way for a supervisor to come back and look at the work you've done and go, okay, if this is entry A, if they don't understand why it was being made, they know that they can go back to your general journal, find entry A, and they can see it, and then it also comes with what? Of course, an explanation, and they can see why you made that entry. One by one, we would do those entries. Entry B was to debit insurance expense for $50 and credit, of course, the prepaid insurance. And again, that's posted in your general ledger account from your general journal. But also, as we can see, here's the insurance expense, B of 50 with the debit, and up here where the prepaid insurance is, we have the credit of $50. And one by one, we list them out. Now, notice down here at the bottom that we have other accounts that we didn't initially have when we pulled our original trial balance previously to start off this worksheet. Because when we pull our trial balance, it was initially just these items right here, and that was it, because that's all we had used. As we make these adjusting entries, we involve the new accounts. And when we involve new accounts, all we simply do is list them as we come to each one and need them down here on the very bottom. So again, we add the accounts down here as we create them in our adjusting entries. When we are done posting all of our adjusting entries into this adjustments column, and also remember into the appropriate account, we total out the column, and again, notice we make sure that it's equal. And if it's unequal, it means that we have evidently done something incorrectly. We've posted it to the wrong side, and we need to, again, make sure that we go ahead and we correct it. Okay? Now, that is, to this point, we've done with the adjustments. Now what we're going to do is we're going to take all these debits and credits and appropriately increase or reduce these accounts. And we're going to do that, notice, in what it's called the adjusted trial balance, because this is the trial balance with adjustments. So let me switch over to this other side so that I can come from this side. And let's take a look at what it does. So what we're going to do is we're going to have the adjusted trial balance. Now, as we get to the adjusted trial balance, all we're going to simply do is take column by column. We start off with cash of $15,200, which is a debit. There were no adjustments to it, so we simply bring the balance over as $15,200. With the advertising supplies, we had a debit balance of $2,500. You have to realize we're crediting at $15,000, which is going to reduce it, and therefore we only have a balance of $1,000. We do that one by one with every single account. Prepaid insurance is $600. It had a credit, which reduces it to $550. What we don't want to do is say, okay, it's $600, and goof up on this and say, oh my goodness, I'll add this and then make this number $650. That will cause a problem for us in the end. So again, do it very slow. Make sure that you get the numbers as you transfer them column by column over as the correct total. When we get down to the accounts we added, of course, they won't have anything in the trial balance, and it simply will be this one number by itself coming over. So this is pretty much a mechanical process of transferring over the totals of the trial balance along with the appropriate adjustment as an increase or a decrease into the adjusted trial balance column. Once we're done transferring all these numbers in, of course, again, what we do is we total up the two columns, and of course, in this case, they both equal $30,190. And again, that's very important to make sure these are always equal. If they're not, you got to go back and find your error. The next step that we're going to do now is take each one of these totals and pull them over into the income statement or the balance sheet column. And when we do this in a second, realize that, and I can't tell you enough, that this total, each one of these numbers only goes in one of the columns. Never take these totals into both columns. Generally, again, it's important that you know what item would become on the balance sheet, which would be an asset, a liability, or the capital or withdrawing account. And that you must know which items are on the income statement. All right, so let's take a look at how the numbers are going to transfer over for that. All you need to do is flip that little transparency you have in your book, and you'll get the example of that. So let's take a look at that. And as we do that, as you can see again, we're only going to transfer one number over from this column either into the income or the balance sheet, but not both. Generally, the initial the initial accounts here will be all balance sheet items, and then we're going to have a mixture. Again, this is right off of our, remember this came from our chart of accounts, and usually if you've noticed in the chart of accounts, assets are always first, liabilities are second, our capital and drawing account are next, and then our revenues, and then our expenses. And that's how we pulled them off here. But then here we have a whole mixture of accounts because we just listed them as we used them. So they're going to jump all over when we pull them. But again, cash had a balance of 15.2. It is an asset. You should know hopefully that by now. It's an asset. Just going to have to memorize these. Advertising supplies is an asset. Prepaid insurance is an asset. Notice that if it's a debit here, I better make sure that I list it as a debit here. I don't want to put it in the wrong column. Here's my office equipment. It's an asset. And then next I have a note payable. A payable is money we owe others, so it's a liability, but it's an asset. It's a balance sheet item, but it's a credit. And accounts payable, same thing here. There's the unearned revenue, which is revenue we've earned in advance, and that if we don't supply the goods or services, we have to give the money back. So, of course, that would be a liability. It would come over to here. Here's our capital account we've learned is a balance sheet item. And you're going to have to learn, as you'll see in a few minutes, that the drawing account, which I have circled over here for a reason we'll learn about in a few minutes, also goes over here. But notice it is a debit, so make sure you have that. Then we hit service revenue. Of course, if it's revenue, it's an income statement item. So it has a $10,600 credit, so make sure you put it in the income statement column under the credit, not a debit. Then we have some expenses here in these two amounts, and again, they're income statement items, but make sure you list them as debits. And then we have to go one by one with each one of these items here. Here's advertising supplies, expense. That's an income statement item. Insurance expense, that's an income statement item. Here's my accumulated depreciation. Office equipment, we learned one of the previous lessons that is an offset to the equipment account, so it's a balance sheet item, it's a credit, so it goes here. Here's depreciation expense, income statement item is a debit. Accounts receivable, you should know, is an asset, so it goes in the balance sheet as a debit still. Here's interest expense. That tells us it's an income statement item as again a debit. Here's interest payable. Payables, money we owe others. And salary payable, money we owe others. So their liabilities, they're going to go on the balance sheet. So all these numbers were transferred over. Again, only into one column. When you're done transferring them all over, you total up the columns. At this point, you can see, no, nothing is equal at all. And that's okay. Because what we need to do is check and see if the two debits and credits in each side, if the debit and credit, in each side, how unequal they are. And what we do is we take the smaller amount from here, and we can see there's a difference of $2,860. We take the smaller amount from here, we can see there's a difference of $2,860. And when we that's our check figure, first of all, in that when we look at these two columns should always be unequal by the exact same dollar amount. And as long as they're unequal by the exact same dollar amount, it's okay. If they're not unequal by the same dollar amount, you need to make sure, first of all, that your columns have been added correctly. And if that doesn't solve the problem, you need to make sure that every single one of these numbers was slid over to one column or the other. And if that still doesn't do it, you need to make sure that when you did slide them over, that if it was a debit here, it's a debit here and not a credit. So you can see you can make a lot of errors when you're doing this stuff, and therefore it's very important when you slide these numbers over that you're very careful as to that you not only get them in the right income or balance sheet column, but that you list out the debit and the credit appropriately, and that you do list the right amount. Sometimes I see students, instead of writing 1,500, they might write 15,000, or they might write 150. So, and it's easy to transpose and create more errors for yourself. Now, once you get to this point, what you need to do is you do need to subtract and find the difference between the two. And when you've done that, you take that difference and for each side, and you put it on the smaller dollar amount so that you can show then you're going to add the two amounts together and they will give you the same total as the other. And you do have to finish off this worksheet just like it's shown here. I do get the dollar difference. I show it underneath. And then I total my columns out to show that when that dollar difference is added to the smaller number, it does come up and equal the other. Now this number is very, very important. This number really represents your net income statement, because really you have your income statement right here. Here's your total income, and these are all your expenses. If you take your total income and subtract out your total expenses, this gives you your net income. And that's what this number represents. We're going to discuss this net income number in a few moments, in the next lesson, and that's going to be our closing entries. So that's it for today. If you have any questions, you know to email, read the write-up, read the PowerPoint, everything. This is very similar to what's in your text. It's what's shown on your PowerPoint. It's what may possibly be in the audio if I had one. And again, I will see you guys real soon.